The video we are going to take a look at today is going to be one, what is a pip? And then two, where is it? Risk management. All right. What is a pip and risk management? We're just going to watch those together. And then I'm going to be using that information to teach you how to start to enter a trade. All right. Because whenever we are trading, we need to know what pips are. We need to know what lots are. And then our risk management is something that else that we're going to need to know. So if you're writing notes, a pip in the context of trading Forex, that's just a unit of measurement. So if you know centimeters, millimeters, inches, feet, all of that fun stuff, a pip just tells you the distance traveled, the distance that price traveled at any point in time. So if the current price on a pair, right? If the current price on a pair was $1 and over the course of an hour, that value of the currency changed from $1 to $1.10. All right. Actually, it's not a great example. I need to actually show you on a chart. So let me do that. Let me do that. The reason I'm doing this is because the way price looks on a chart is different to what we would see as just dollars and cents, yeah? All right. So, we're going to be focusing on the right-hand side of my screen. And let's see. I just want to make these numbers bigger so we could see them a lot clearer. All right. So whenever we're looking at a chart, there are a couple things that we're going to be seeing. Right here, the British pound to the Canadian dollar. We are always trading pairs, right? There's always a relationship between two currencies. This chart is going to tell us for one Great Britain pound how many Canadian dollars that we can get. So if the current price was right here, if you follow my yellow line, if the current price of that relationship was 1.84528, that is telling us at this point in time, right now, right this second, that we would get for one British pound, we would get $1.84 Canadian dollars. All right. So the bottom here represents time, the right side represents price. So for my brand new people, if that's clear, put an AC in the chat. Here in the community, AC means all clear. If it's hazy or fuzzy for you, just put NC, not clear. All right. So time and price, those two things are going to be important. Now, when I mention pips, if, let me get a nice hold, nice round number. All right, let's imagine that this was at 1.840000. If price started there and went up to 1 pip, if it went up by 1 pip for this currency, that would be 1.84. 1.840. All right. So when we're talking pips, we're going to be focusing on, right, the third and fourth number after the decimal point. All right. So 1.80, 1.8400. If that were to change to this, that would be price went up by 1 pip. If it went up by 10 pips, you guessed it. All right. 8410. If it went up by 100 pips from 8,400, we would be at 8,500. All right. Let me know if we're good. Are we following here? From 0.8400 to 401, that is 1 pip. 8410, 10 pips. 0.85. It's 100 pips. Let me know if we're good. I know some of my other beginners, you guys have been here for a while, and this is already pretty clear for you. I just want to make sure we have this because this is going to come into play and it could get real confusing real fast when you're trying to work it out to enter a trade. All right, cool. Talking about, right, is this. We have two. All right, I need to share my screen again. Actually, no, you guys should be seeing you should see my screen, right?
Yeah.
Okay. All right, so I'm going to keep these examples here. When we're trading, you're going to see that there are two types of currencies, all right? Right here, we are looking at the Great Britain pound to the Canadian dollar. These currencies that are US based or Canadian based or pound, they tend to have this kind of setup in the numbers where there's one number and then four numbers after the decimal point. There are some currencies, usually in Asian side of things, that would have a different setup, right? Where you would see three numbers. So it would be like 130 point and then two numbers after the decimal point. Right? Those are currencies that have the Japanese yen included. So for these numbers with US, the pip is the fourth number after the decimal point. For these numbers with the yen, the pip is the second number after the decimal point. Okay? So that would mean if we wanted to go by the same standards, 0.60 to 0.601, that is one pip. 10 pips is going to be 70. And then 100 pips is going to be 131.60. All right. That's just the difference between these two. Anything with JPY is going to have this type of setup. All right. So when we get to the phone, I'm going to show you what this looks like. But that's just so you have that information to start with. All right, let's see if one of these other videos is a lot louder.
Per pip. Okay. Now, again, this is going to be important to understand.
All right, not that loud. All right, so right here, we're gonna see these things called lot sizes. Now, what a lot size does, that allows us to gauge how much we're going to be paid per pip movement. All right, so when we're in these markets, and we're trading, our broker is going to allow us to carry more than we were able to carry ourselves because originally to trade in the foreign exchange market you needed hundreds and thousands of dollars, but thanks to the broker they give us leverage and they allow us to trade using these three things: a standard lot, a mini lot, and a micro lot, where a standard lot is going to look like, when you put in it in your phone, it's going to look like this. You have a one to start with because you can go anywhere from one to whatever number. So a whole number, dot, three numbers, three digits. Okay. This is going to represent 100,000 units of that particular currency. So if we were looking at this on the screen and we were trading the euro to the US dollar and we wanted to trade a standard lot of this, we would be essentially taking a trade with 100,000 units of the euro to the US dollar. All right. Now, what that looks like in reality is if price moved 10 pips in your direction, one standard lot is worth $10 to you. Okay. So if price move one pip, you would gain $10. If it moved 10 pips, you would gain $100. If instead of a standard lot, Anita took a trade, she used a mini lot. A mini lot means that you're going to be, for every pip movement, you're going to be making $1 per pip movement. Okay. So if that price moved 10 pips, you're going to gain $10 for that move. That's using a mini lot. And a micro lot, you would be using 10 cents for every pip movement. So if that trade moved 10 pips, you're going to gain $1. So let's see. Jenny could have taken the trade at a lot size. Anita could have taken the trade at a mini lot size. And Khadijah could have taken that trade at a micro lot. You three traded and got the same amount of pips on your trade. But because you chose different lot sizes, you make different ranges of money. All right. Let me know if that's clear so far. All right. Perfect. Now, here's the deal. When we are entering the trades, we're going to get to that in a second. You want to be careful when you're entering your lot size. Because if you have, let's say you had $200 on your account. Okay, not clear. All right, let's say you had $200 on your account. All right. When we're trading, you can predetermine how much you want to lose. Here in the profit arena, we like to teach. All right, let me do it. In the profit arena, we like to teach that you want to risk no more than 3% in any given trade. So if you have $200 in your account, your risk, what you are willing to lose, is going to be $6. All right, it's going to be $6. Actually, let me share my screen so we can see this happening in motion. All right, so I will put these parameters on the screen. You have $200 on your account. Your risk in that trade is going to be 3%. Okay. And 3% to you is going to be $6. When we are calculating what our lot size is going to be, right? Because these numbers need to add up. The number of pips that we're trying to trade, the lot size that we're using, and the risks that we have, right? These three things have to work together so that we are able to predetermine how much we're going to lose or how much we're going to gain. So with $200, we only want to lose $6 on this trade. And let's say the stop loss is going to be something like, let's say that is 20 pips. Okay. Let me draw a picture here. Stop loss is just a term that we have in trading that literally means what it says. You're going to stop your loss when price gets to that point. So your stop loss is like your security blanket. You can predetermine that you only want to lose whatever you want to lose, right? And when it reaches that number, it's not going to go any further. All right, cool. Now, our stop loss is this red area, right? Because for this conversation, we're going to assume that we want to buy. That stop loss is equal to 20 pips. So I'm going to ask you a question. Let's say you guys were taking this trade right now, okay? If you knew that you were going to lose 20 pips on this trade, how much would you like to gain for this trade to make sense for you? Would you like to gain twice as much, three times as much, or the same 20? What would make this make sense? All right, 60. So we got 3 times as much. I'll take 3 more answers. 3 times, 3 times, 3 times. All right, cool. All right, so let's make this make sense. All right, Jesse says 2 to 1. For the sake of the conversation, we're just going to go with 3 to 1. All right. Now we know that this 20 pips equals to $6. All right. And that means that if our stop loss is $6, that means we're okay with losing $6. Our take profit is going to be 3 times that. So that is $18. Okay. Just making sure you see what the relationship between these two things are. All right. So if 20 pips is going to be $6, we got a little bit of math to work out. All right. So let me get that for you. Where is that? All right. So right here at the bottom says risk per trade divided by the stop loss multiplied by, well, this is going to be multiplied by 10. All right. So risk per trade for us, the risk in the risk per trade is going to be $6. So $6 divided by whatever the stop loss is, which is 20, multiplied by 10 should give us what our lot size should be. Let me get my calculator. You guys are seeing my calculator on the screen, right? Let me know. All right, so the risk per trade, 6. All right, so that means for this particular trade, if we were going to take it, our lot size will have to be 0.03. Now let's check this. Let's check and make sure that this works out. Remember what I said, when the number looks like 0.03, that was the browser. Where's the browser at? Mm, okay. When we got 1.00, which is a standard. We got a 0.01, which is a mini, and a 0.10, which is a mini, and then 0.01, which is a micro. All right. So our stop loss is supposed to be 0.03. Which of these three types of lot sizes would you say 0.03 is? Let me give you the range. Do you think 0.03 is a mini lot, standard lot, or a micro lot? All right, one person for micro, two for micro. All right, awesome. Yeah, absolutely correct. That is a micro lot. All right, and I mentioned each micro lot is worth, let me know, put in the chat if you remember what I said. Each micro lot is worth how much in dollars? $0.10. All right, so if we have 0.03, all right, that means for every pip that price moves, that's going to be worth 30 cents. All right, our lot is 0.03 or 30 cents per pip move. All right. So we just checking the math back real quick. So if we have 30 cents moving every time a pip goes, and this is going to move for 20 pips, 30 cents over 20 pips, it's going to give you $6. Is anybody lost here? All right, let me bring back up my calculator while I'm waiting for your answers. But let's say we had 30 cents multiplied by 20, boom, $6. All right, information. All right, so let's change up these numbers a bit. Let's say our stop loss was 30 pips. Whoops. All right, which means you guys want to do 3 to 1. So our take profit is going to be 90 pips. So if it's 30 pips, the thing about our risk is the number doesn't change, right? You're only risking 3% in any trade, right? Sometimes because of what our risk is and because of what our balance is, we would not be able to take the trade, and that's completely fine. So with this stop loss at 30 pips, our risk is still 3%. 3% of $2,200 is still $6. So regardless of what this stop loss is, it's still $6. All right. We're going to see if our lot size is, if we're going to get a lot size that we can use, or if we have to just leave this trade alone. So to work this out, we have this equation, which is risk per trade in dollars. So 6 divided by the stop loss, which is 30 multiplied by 10. So 6 divided by 300. When we multiply 6 by 300, where did my calculator go? What do we get? You can type it in the chat if you already have it. 6 divided by 300. 0.02. Okay, this is the lot size that we would put in our phone if we were going to take this trade, 0.02. All right, and this is the formula. All right, so if you're taking notes, you definitely want to write this down. Risk per trade in dollars divided by stop loss multiplied by 10. All right, so this would be a 0.02, which is how many cents per trade per pip movement? 0.02. How many pips per, how many cents per pip move? When we had 0.03, it was 30 cents per pip. So 0.02, that is going to be 20 cents per pip. All right. And if we had 20 cents and we multiply 20 cents by 30, we would still get $6. So yes, we could take this trade. Now, yeah, you'll still take this trade. Now, what we're going to do here is take a look at some of the things that we got in the trade ideas. Live trade. Oh, wrong chat. All right, so we're going to look at this. This trade on gold. This trade on gold. All right, stop loss was 300 pips. Whoops. 300 100 pips was the stop loss. So we're going to see if our $200 account could handle this. All right. So 300 pips. That means that we are going to have risk per trade is going to be 6. 6 divided by stop loss, 300 multiplied by 10. All right. So 6 divided by 3,000. That really takes way too long. Where did my calculator go? I mean, the short answer is no, we can't take this trade. It's definitely the short answer. But 6 divided by 3,000. All right, this is a 0.002. This is not a lot size that we can use, so we would not be able to take the trade if our balance is $200. Now, let's take a look at if our balance was $2,000. All right, that means that our risk would now be $60. You guys see what happened there? $2,000 in our account, 3% of 2,000 is 60. Let's see if we can take this trade. The risk per trade is $60 divided by 3,000. All right. So just to take that particular trade that came out today, for you to take it and use good risk, you would need to have had $2,000 in your account. All right. Now, this is just information for you as a beginner. As you get more comfortable in the markets and you grow in your knowledge, you will be able to take a calculated risk. Because one of the rules we have here is risk no more than 3% per trade, but then also risk no more than 10% in a given day. So let's say, for argument's sake, you decided you're going to take a calculated risk, but do you have to make that much pips? That's the stop loss. The stop loss is if it goes bad. All right. Whenever you're taking the trade, you want to consider what's the worst that could happen. Okay. So on gold, the stop loss was that much. And that's really because of what's going on right now. The pip count for gold has significantly increased. A couple months ago, a stop loss on gold could have been 50 pips, 60 pips, stuff like that. But because of what's happening now, we got this insanity happening. All right. There are other pairs that will have a much better pip count, so that we wouldn't need to get into this sort of trouble. But let's see what would happen if you took a calculated risk. Yeah. Now, calculated risk means you are going to put all of the risk for your day, your whole 10% in this one trade. So let's see what happens with our $200 account. $200, you're going to risk 10% on this trade. I know we're pretty good with math, so for if we risk 10% on this trade, our we can lose $20. Okay? Let's see if that's good enough. So this then means that it's 20 divided by 3,000. All right, 20 divided by 3,000. Still want to be able to take this trade. All right. All right. Hopefully that has been enlightening. You can always go back, you can watch the replay, but I want to show you what happens when we are using MetaTrader 5. All right. So you're not going to see my face for this because my camera is my phone. So I'm gonna just switch to that and I'll be right back. Well, I'm going to be here. You're going to hear me, but not see me. All right. Let me get a pair. Oh, wait, I'm not sharing yet. Zoom. All right, just give me let me know if you guys are seeing my phone. I believe you are, but I just want to be clear that you are seeing it. Yes, perfect. All right, so let's get a pair. All right, Great Britain pound to the Canadian dollar. So we're going to keep with the idea that we do have $200 in our account and we want to place a trade. All right, $200 in the account. Our risk is going to be still $6. So we're just going to do that and see what we come up with. All right, so if we were going to take this trade, first of all, you will be on this page with the Great Britain pound to the Canadian dollar. You're going to go to quotes down in the bottom left of your screen. Actually, let me know if you let me show you how to add the pair just so we're on the same page. So on your quotes page, if you have an iPhone, so I know some of the things are going to be slightly different for the Android users, but the quotes button, the quotes screen should still be in the bottom left corner. If you have it, just type a three in the chat if you have it. If you have this screen up. Okay. All right, good stuff. I am looking for you, Jesse and Jennifer, just to be sure. All right, so I will move forward, and then if anything, when you replay, I can always start over. All right, so on the top of your screen where you see this little pencil, um, oh, we're using MetaTrader 5. Let's see, where is that? Where is that? Where is that? App should look like this one here. Do you have this as yet? If not, you can go to your app store, the Google Play Store. You could type MetaTrader 5. Um, then I also need to get you guys into the getting started chat so you can see how to add your accounts and all of that. All right, so you have that. Just tap on it. Open up the app. And on the quotes page, you want to tap on your search button. We are looking for GBP CAD. All right, Great Britain pound to the Canadian dollar. All right, once you have that added, just go ahead and select trade, actually. And if you have your demo account, please, you want to be doing this with your demo account and not your live account. All right. Or just don't take the trade. You could follow me up to the point of entering the trade, but I don't want you guys to take it. All right. So actually, let me give you guys some numbers so that we keep this as real as possible. So we are going to be entering what's called a market execution. That just means we enter the trade right now. Okay? We're going to enter the trade immediately. All right, we're going to put our take profit this little blue line there. And we're going to put our stop loss above here. All right, well, since we're entering there, this should be like a 1-to-1 risk to reward. All right, so let me get the number for you. Let me type it in the chat so that we all have it. 1.8710. All right, this is going to be your stop loss. Remember, this is for your demo account only. Demo account only. And then the take profit is going to be 1.866. We're going to come down here. 1.8, just call that 75. 1.8675. 8675. All right, it's a sell, and we're going to do a market execution for a sell. All right, so back to the quotes. We're going to tap on Great Britain pound to the Canadian dollar. We're going to tap on trade. We should bring us to this screen. Okay. We are from here. We know our, actually, we need to figure out how much pips that is, Kirk. All right. We need to be able to measure the pips from where we are. So if we enter this trade right here, now I'm not sure. Actually, yes, we can still do this. Um, on Android, I think when you tap your screen, a little wheel comes up. Correct me if I'm wrong, but I believe a little wheel comes up, and you're going to be looking for the icon on this wheel that looks like this right here. That looks like a square, a circle, and a triangle. That's on Android. But for iPhones, you can just come here, click on this button with the square, the circle, and the triangle. And what we're looking for is an arrow. So if you don't see arrow in your list, you're going to tap add object, and we're going to tap on arrowed line. All right, so just so we can go ahead and enter this, the stop loss is probably going to be wrong for us. Sorry, it's probably going to be outside of our risk, possibly. But don't worry about that for the sake of this. I just want you to see what it's like to actually enter the trade, and we can always go back and take a look at it afterwards. All right, so we're on the trade page. Whoops. I have to go. Sure. Rashawn, just because you're in the group, right? So just look for me and just message me and say, hey, add me to the group. Okay, that's not what the time frame we have. Okay. Well, we're not going deep into time frames and all that. I just want you to put the numbers in. So Great Britain pound to the Canadian dollar. We're going to type trade, and we're just going to put in the same numbers that I gave you before. The first area where it says stop loss, this is where you're going to put that in. On Android, I believe these two things are side by side. You're not going to see the word stop loss, but it may be a line on the left that is like it's a red line. And then the green line is going to be your take profit. All right. Um, you want right here at the top of the screen, you have these different options for how you can enter the trade. Oh, you got a link from a friend. Okay. Um, well, there are a few steps you got to make to be part of the community, right? It is free, but we just need you to be able to have the broker that we all use. That's just so we all have the same problems and we can all get them solved in the same place because of the relationship that we have. So I think should be able to add you to the getting started group. All right. Rashawn, just yeah, send me a direct message here on WhatsApp with your number and we'll see what we can do from there. All right. So you want to make sure that your thing is on market execution as opposed to buy limit or sell limit or any of these other things. Market execution. We're going to type the stop loss that I had in the chat, which is 1.8710. We're going to type the take profit as well, 1.675. And because we want to sell, we're just going to hit the red button, right? We're going to hit the red button for the sell. And we're going to use the same lot size that we saw. Actually, just going to do a 0.01, which is 10 cents per pip, so that this should be fine. All right. And when we press sell by market, the trade is now going to be active. All right, Rashawn, I got it. All right. So that's pretty much how you enter a trade. At least that's one way to enter a trade. Get rid of these arrows. Now, what I wanted to show you is if you use the arrow and you start anywhere on the screen, you see there's a number here that's like changing right here in the middle where it says 241 right now. This arrow is actually measuring the number of pips, right? Mine's sending invalid stop loss. Interesting. And it's Great Britain GDP CAD that you took the trade on. The number should be 1.8710. You shouldn't have a problem. And you're using your demo account. All right. So this number at the top that's changing, that's actually your lot size. I mean, sorry, that is the pip, the number of pips. So from where we took the trade, which is this red line here, up to this yellow line, you're only looking at the first two digits. So to the yellow line, that is actually 18 pips. All right. Which is great for us. So let's double check um our formula. So you don't have a demo comments yet. All right, no problem. No problem. Um, yeah, so that might be why it didn't go in. All right, so for now, we'll just be able to rewatch the video to get a bit more insight. And then there's also another video in the chat about how to enter the trade. All right, so if we are entering the chart and we see that we can use the arrow tool to figure out what our pips are going to be, and this says it's 18, then by using our formula, we would know, okay, our risk per trade in dollars, that is still going to be 6, all right? Because we have $200 in our account. We're trading with a 3% risk, so that's going to be 6. 6 divided by, stop loss is now 18. 18 by 10, 108. 180. Jeez. So if that is what we have going on here, let's see what our lot size should have been. 6 divided by 180, 0.03. All right, so I'll show you another way that we can enter a trade using this lot size, which is now going to be correct based on our account. What we're going to do is we're going to click on this icon at the top right. This one that looks like a circle, like a clock. Um, Android users, you could let me know if you have this same icon or if it's something different. Actually, all right, cool. So we're gonna tap on that. And when you do, you're gonna realize you have this little line, right, that you can move up and down with your finger. All right. So this comes in as a limit, right? We can worry about limits later. At the bottom of the screen now, you're going to see that you got to slide it to the left or the right, and you should be able to change it to market execute, right? That's the first step. Change that to market execution. Then we're going to tap on this little stop loss button, the red little stop loss button. You should get a red bar on your screen, and we're just going to push that where our other stop loss was. Then we're going to push the green button and pull that down to where our other take profit was. Other way that we can enter the market now is we're going to look in the top right corner. You see there's a rectangle with its red on the right, blue on the left, the white thing in the middle. We're going to use that instead. So when you tap that, you should get these two things popping up on your screen, or you might get a message. You might get an alert asking you if you want to like enable instant something or the other. I don't remember what it's called. Right? But if that did pop up, you could say yes. Here in the middle, that's where you're going to put your lot size. You're going to put 0.03, and then we're going to tap the left side where it says sell. Right? 0.03, we're going to tap sell. That's going to give us another entry. Now, hopefully you guys were on your demo and did not take this in your live account. But those are two ways that you could have entered this trade. Now, if you go over to, oh yeah, I may not overcomplicate it and teach you guys too many things, but that is pretty much it. We're so far, all right, let me stop sharing. Stop share. And let me see if I can get back my camera. But so far, we started by learning what a pip is. We went on to learning about risk or risk management. And we were able to put those together so we would learn if we entered a trade, what our um smart tape profit, what our lot size would be. All right. Zoom. Where's zoom? Where's zoom? Where's zoom? Ah, here we go. Why are you so zoomed in? Okay. Right. Like I was saying, so we started by figuring out what our risk is. We're learning what risk is. And risk is what we are willing to lose in any given trade. It is important to start with that first because if we can determine what we're willing to lose, then we're pretty much going to be more confident entering these markets. All right. Because if you know at the worst case scenario, you can lose with a $200 account, you can lose only $6, then anything after that is going to be profit, right? If you look at your phone and you realize that you're seeing minus $4, you're still fine because six was what your stop loss was. From there, we looked at the equation that is going to help us calculate our lot size. And that lot size is what determines how much we're being paid. We would have learned that there are three types of lot sizes: standard, mini, and micro. Standard lot sizes means that for every pip movement, we're risking $10. A mini, we're risking $1. For micro, we're risking 10 cents. All right. And the range for each micro is going to go from 10 cents to 90 cents. Mini is going to go from $1 to $99. And standard is going to go from um mini is going to go from $1 to $9.99, and standard is going to go from $10 all the way up. All right. So our equation that we learned was risk per trade in dollars divided by the stop loss multiplied by 10. If we took a trade, stop loss is 20 cents. Stop loss is 20 pips with our $200 account. That means 6 divided by 20 multiplied by 10. 6 divided by 200, our stop loss is going to be 0.03. 30 cents for every pip movement. Family, this feels like a lot of math right now, but as you trade more, right, you're going to get more comfortable working out this stuff. And then some of it, you're going to be able to start to calculate just um mentally, right? You're going to be like, okay, cool. This is about 20 pips. My stop loss should be X, right? And it's going to be a lot easier. First time hearing it, I can understand how this gets very, very hazy. But let me know